Now this morning in my overview I want to do a brief presentation as I often do, and this morning's presentation it's going to emphasize again the power of PTRs, mid-PTRs, and shelf ice. It's going to be a brief overview of that topic with a focus on 1125 shelf ice on the S&P 500. Now what I have up here is a chart for those of you in the den. It's a chart of the last month on the S&P 500. And it's a daily chart. And I've drawn four horizontal lines here, one at 1050 on the S&P, one at 1075, one at 1100, and one at 1125. And those horizontal lines show that the price has been bouncing around and deflecting, bouncing off those four horizontal lines over the last month. Now we topped out back in August 2nd through the 10th and spent 6 days trying to get through 1125 on the S&P, and we couldn't do it. We came down, broke below the 1100 blue line that I have here, came down to 1075, bounced back up to 1100, couldn't get through that, turned and bounced down to the 1050 area. We spent about 6-7 days down there, August 24th through the 31st, turned and ran up to the 1100. The blue line again. We paused there for 3 days from the 3rd of September and the 7th and 8th. It was over a weekend, and the holiday weekend. And then we ran up to the 1125, and we've been at this 1125 now. We're at our 4th day up here at the 1125 area. So you can see on this little chart that I have here that these four lines, the price seems to be heavily influenced by these four lines. Now, if I had just drawn these lines in after I look back over a month, that'd be one thing. But I knew these lines were there and had drawn these lines before the S&P ever got here a month ago. Now, how did I know these lines? Well, that's what I'm going to talk about in this presentation. I'm going to try to convince you that a lot of the price movement in the market is predictable by using these lines. I'm going to talk to you about these lines during this presentation. Okay, now as technical analysts, we put signals on, we try to get signals out of charts, and we do that by putting overlays on the charts to make them give up their signals. And I use 7 types of overlays. I use candlesticks, I use diagonal channel lines, I use diagonal subchannels, I use something called confluence resistance and support levels, and I use technical patterns. But I also use PTRs, which are primary trading ranges, and I use mid-PTR ice and shelf ice. And that's what I'm going to focus on exclusively today, just those two areas there, PTRs and mid-PTR ice and shelf ice of the 7 technical indicators that I use. All right, now I'm going to talk to you a little bit about the background here. ICE, this term ICE that I'm using, this is a term that was invented by a guy named Richard Wyckoff, and ICE was Wyckoff's term for visible support resistance level, and Wyckoff was a technical analyst who did most of his work back in the 20s and 30s, very famous stock market authority, and very wealthy guy as a result of it. And we all stand on the shoulders of geniuses who came before us, and Wyckoff was definitely a genius. And I use the term ICE the same way that Wyckoff used it, but I've really never been an advocate of Wyckoff's total work, and all of the work I'm going to talk to you about today on PTRs, mid-PTR ice, and shelf ice is strictly my work. Now, PTRs, mid-PTR ice, and shelf ice, they're all just different types of ice. And PTRs, what I mean by that, are primary trading range boundaries, as I said earlier, and PTRs are horizontal lines that represent visible support and resistance level on charts that exist at specific price points and that are evenly spaced on any given chart. And you might think of PTRs just as you would the floors and ceilings of a building, because they act like floors and ceilings. Now, floors and ceilings are evenly spaced in any building, and so are PTRs. Floors keep you from falling lower, and so do PTRs. And of course, ceilings can keep you from going higher. And if you're coming up on a stock or an index like the S&P, that's what PTRs can do as well. Now, builders use blueprints, and that way they understand what they're doing when they're building a building. And once we correctly overlay PTRs as an example on a chart, we then have a blueprint that we can use to understand the price movements. So I'm going to give you some basics today, just a little education, then we'll show you the point of the exercise a little later on. But the basics here, all horizontal lines, again, of visible support resistance are called ice. Primary trading ranges, or PTRs, are particularly strong levels of ice that can often contain consolidations. What I mean by consolidation is a sideways price move that looks like a sine wave, and I'll talk to you about that more in a second. Mid-PTR ice is very simply just ice that's always halfway between PTRs, and it's often a reversal area. Now, shelf ice is ice that always exists just above and below every PTR, and we borrow that term. There's a term shelf ice, and if you look that up, it's really ice that exists off the coast of, say, Antarctica, and as an example. And what it does is it changes the waves off the coast, and that's what happens with shelf ice. It is ice that's located right around PTRs, above and below them, and it can also change the direction of price movement. Now, we talked about this sine wave, and there's various waves. There's square waves, triangle waves, sawtooth waves. Sine wave is like a sideways S. It's an S on a sideways move, okay? It's like waves in the ocean. And that's important to using PTRs. The other concept that's important to locating PTRs is to look for a lot of co-located opens and closes. If it's visible support and resistance, visually you should be able to see a lot of candles won't be able to get through it when they're trying to come up from below. And when they're trying to come down from above, they should be supported by it. So here I have a little chart shows $26 on this SYNA stock here. SYNA is PTR. So remember, if you're going to locate PTRs, and I'm not going to teach you all about that today, I can't in the time I have, but remember, a primary trading range boundary is a PTR. It's ice is strong enough to contain a consolidation, so in addition to looking for lots of co-located opens and closes, we look for sine waves. And here's a chart of Goldfields on a weekly. This is a gold mining stock, and it's about a 3.5-year chart, and it shows on this weekly that repeatedly Goldfields bounced between $10 and $15. Those were PTRs. I drew blue lines there on this chart to show it, and you can see a big sine wave there. For 3.5 years, this stock was trapped in that area, 10 to 15, by those PTRs. So two characteristics of PTRs you got to understand. The distance between PTRs is always constant on any chart. So if it was $5 on that previous chart on Goldfields on that weekly, and it was at 5 and 10, then the next PTR is 15, the one above that is 20, 25. In other words, if it's 5 anywhere on that chart, it's 5 all the way on that chart, and every 5 would be, in that example, would be a PTR. And the other thing you got to understand is PTRs last forever. They don't wear out. If 5 and 10 are support and resistance now, if the chart goes to, let's say the stock goes to 100 and then it comes back to 5 and 10, 5 and 10 will still act as PTRs. They'll still be price traps. They'll still be important support and resistance. They last forever. They don't wear out. Now I'm going to introduce those two terms I mentioned before, shelf ice and mid-PTR ice. There's nothing fancy about mid-PTR ice. I have a little chart here of something called the XLF, which is a financial ETF. It tracks the financial sector. And the PTRs on this, the blue lines I have drawn here, are $13.50 and $15. And it shows currently that the financials have been in a consolidation, a big sine wave between $13.50 PTR and the $15 PTR for about 4 months now. And then halfway between $13.50 and $15 is 14.25. That's mid-PTR ice. And you can see I have drawn some shelf ice here, $13.30, $13.70, $14.85, and $15.10. And that's ice that's located around the $13.50 and $15 PTRs respectively. And you can see over the last 3 days, for instance, we deflected down from the $14.85 shelf ice on the XLF. So that's how we draw shelf ice and PTR ice and PTRs. Okay, and just like PTRs, mid-PTR ice and shelf ice, they last forever. They don't wear out. So let's go back to the past month on the S&P again and re-look at this chart. And then you take those 4 lines I drew, 1050, 1075, 1100, 1125. 1100 is blue. It's a PTR. 1050 is mid-PTR ice. It's halfway between the 1100 and 1000 PTRs on the S&P. 1075 and 1125 are shelf ice. They're located around the 1100 area, and they act to deflect the price as well. Now you can see in this chart, in August 2nd through 10, the 1125 was stopping it. That was shelf ice. And again, right now, we're being stopped by the 1125 shelf ice. Now, if that just happened now, that'd be one thing. But I told you I drew the lines before that we've done this on the S&P before the last month. And I'm going to go back and show you how they last forever. Here's a chart that goes to mid-March to mid-June of 1998. Folks, that's 12 years ago. And here we have the 1075, 1125 area. And you can see the for 4 months here, the S&P back in the 98 period was dancing between 1075 and 1125. It was hitting the same resistance it's hitting now. It took 4 months before it could break through it. Here's a chart of mid-January to mid-March of 2004 on the S&P, and you can see 3 periods here. The January to March time frame, we were trapped between 1125 shelf ice, which is blocking us now on the top side, while we were above it, and we were bouncing between the 1150 mid-PTR ice and the 1125 shelf ice. So that's a case there. It shows 1125 was active in 2004. Here's another example here in the mid-March to early April time frame, where we're bouncing essentially between the 1100 PTR and the 1125 shelf ice. And then a third period where we were bouncing between the 1150 mid-PTR ice and the 1075 shelf ice. So again, this stuff lasts for years. So back to the present, we're trapped at the 1125. And folks, this is just an example of the great technical analysis available at tfnn.com. You can go there, check out tfnn.com, try out my weekly newsletter, The Torch, my daily program, The Opening Growl from 10 to 11, and my full webinar on Power PTRs is available all at tfnn.com if you're interested. Have a great day, folks, and hope you can use some of this to help predict the price movement in the markets, just like we're doing at TFNN.